Hey everyone, NIO's stock is down 27.6% in the last month. So understandably, there's a lot of investors asking what's going on with NIO stock. So in this video, I was going to provide a brief explanation surrounding that question, what's going on? And to answer that question, I'm going to look at what NIO's CFO said in the company's most recent investor update. So let's jump right into it. Starting with what they said about sales. So the total revenue in the second quarter were RMB 8.8 billion, representing a 4.8% decrease year over year and a decrease of 7.8% quarter over quarter. So this can largely explain what's going on, why the stock price is down so much is because NIO is priced, it's valued like an fast-growing growth stock, but meanwhile its revenues are decreasing year over year. Now this was the decrease in vehicle sales year over year was mainly due to the lower average selling price as a result of the higher proportion of its 25 and 75 kilowatt hour standard range battery pack, so lower priced models being sold, and a decrease in deliveries overall. Now, NIO fails to mention here that competition really intensified in the first half of the year in China as several EV automakers slashed prices, including Tesla and others. And so when others lowered prices, NIO also lowered prices, and there was a decreasing level of sales prices in the region overall because of the intense competition. Remember, the government tried to, well, not the government, but EV automakers tried to agree to neutralizing the competition and not lowering prices even further because it was harmful, they said, to the industry overall. But then the government stepped in and said, wait a second here, you guys all can't agree to not compete against each other. That's anti-competitive. It's bad for consumers, so we're not going to allow that. And then that tentative agreement fell apart and price cuts were soon announced right after that. So the price cuts have not ended in the region, and there's no telling how far down they will go from here. So partly due to those price cuts, the vehicle margins in the second quarter were 6.2% compared to 16.7% in the second quarter of 2022 and 1.1% in its previous quarter. So even though vehicle margins, gross margins were down from the previous year, they were up from the previous quarter. So it looks like the worst of the impact from the price cuts has been absorbed by NIO in terms of the profit margins. And lastly, the company's loss on the bottom line worsened, losing RMB 6.1 billion, which was an increase of 19.6% in the second in compared to the previous year. So this can explain why NIO stock price is down for the last month. The increasing competition, the decreasing sales, the falling gross profit margins. But thankfully, management had an optimistic tone when discussing the second part of the year, when talking about what they expect to happen in the second half of the year. And they're talking about rising sales, rising deliveries, and increasing gross profit margins back up to the levels in double digits. So while the company did not have or had a disappointing first half of the year, the second half is shaping up to be better than the first half. So that's something that NIO stock investors can look forward to. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.